February 27th, 2024. Spoos! They're rocking. Look, they're up 5. They haven't done anything yet. We were a little bit lower, and then we headed higher, and then we went lower, and now we're basically massively unchanged. It's really not all that exciting out there this morning. So the spoos are only doing about 150,000 contracts, which is light and fluffy. Obviously, I like to look at the bonds a lot, but the bond furball, the bond volume is well, how shall we say this? Unreadable. This, people, is what we term a bond rollum. In the bond roll, it's just impossible to read into volume. You just, you can't do it. You don't want to do it. You can't do it because, well, there's a roll. That roll though is well, that'll be basically over in the next day. So we'll be able to read some bond volume again. So we're going to come into the cash open here in the next 2 minutes. There is a lot of earnings out. So I got that going for me. There's earnings coming out. Well, earnings are out like Zoom. There's some upgrades, some downgrades, some laughing, some crying. One of the things that was surprising this morning is, just from my perspective, how kind of mellow markets are. A durable goods print came out this morning that was horrifying. It was month over month. It was horrifying. We'll talk about that after the cash open. But again, what are we looking at in terms of major sectors? So just briefly, taking a look at energy, unchanged this morning. Taking a look at financials. Financials actually saw some sell side activity yesterday. Sell side predominantly because of Berkshire Hathaway, where the financials right now up mildly. Then we come into big tech. Well, there's only one stock really left in big tech, and this is as close to unchanged as Nvidia has ever been. It's only up about $4 in the pre-market. Look, it's only up. It's only up $4. Tesla actually has a $5 bid under it again. Meta is a pile of crap. I said it now. Unchanged in Google after getting whacked yesterday. Amazon's down nominally, and Apple, nothing going on. Just to point out, there really isn't anything going on in big tech. You have Nvidia with a bid, Tesla with a bid. Let's actually see into the cash open whether those are sustained. So the advanced decline line will be decisively positive. We'll have positive ticks. And with that, let us come to this Tuesday morning cash open here at Theo with spoos, again, listlessly higher. All right, so Amgen. So there's the advanced decline line, as I said, would be positive. Nothing crazy. Let's not get crazy. Ticks this morning. Where are we actually going to open with a tick? Well, would you look at that? It's a very strong positive tick, almost a positive 1,000 tick. And ironically, the market backs off in the first minute. So that makes sense, though, because look what just happened in Nvidia. Okay, I know that doesn't look like much, but it was trading 94. Now it's only trading 91. It's massively unchanged into the open. We'll see how this plays. Again, it's, I think a lot of people probably read, articles over the weekend, articles this morning. It's one freaking stock that's running the whole market right now. One freaking stock. You can point to as many other, things as you want. ARM is going up, and this one's going up, and supercomputer is going up. No, okay, nothing matters because the market cap of Nvidia, okay, the move on a day-to-day basis is more than the value. Okay, the market cap movement on a day-to-day basis in Nvidia is more than the value of most of those stocks combined. That's how much chaos we're really in right now. Again, I'm tuning into the S&Ps a little bit this morning, and you'll note from time to time, especially lately, I'm looking a little bit less at ticks. Okay, and I know that that's kind of strange. It's kind of strange for me to say, but I'm actually looking less at ticks just in the last, I don't know, couple of weeks, trying not to read into these internals too deeply, because truth be told, no one gives a damn when you have, couple of stocks that are actually running the roost out there. and that's one of the things that I keep reiterating on a day-to-day basis. And I'm saying this again this morning. It's each and every day right now, you have to be on what I would term Nvidia watch. All right. And again, it doesn't matter whether you're trading S&Ps or not. Okay. It doesn't matter where you have positions. If you have positions, Nvidia, that's in the limelight right now. And should Nvidia fall out of bed, which it will, and some point this week things are going to get crazy in there, right? And I'm not saying just to the upside. I am actually making a comment like, look, the stock is actually going to back off. It's going to get all kinds of crazy. It's already Tuesday. You only have a few days, and it's going to happen this week. The expected move, at $33, $53 next week. I mean, these expected moves are ridiculously high. You've also got in each and every week, right? You're in a volatility situation that almost looks like there's freaking earnings coming out. So it's on right now, and you're going to have a day where Nvidia gets whacked back a little bit. The only question at that particular point, okay, will Nvidia actually take the S&Ps down at all, or which is plausible, or would we see a rotation like oh my gosh, let's decide to buy Apple because no one's bought Apple this year, right? And I was talking a little bit about like year to date. We can go back to that a bit later this morning, but it's not often that I come in here and I'm like, look, you need to prepare yourself for some wild child movement in Nvidia. Again, what I can't handicap though is if we're going to see a rotation. So are we going to whack Nvidia and start buying other products, or are we just going to whack Nvidia and take the marketplace apart with it? Speaking of taking the marketplace apart, yesterday predominantly did exactly what we anticipated it to do. We actually towards the latter portion of the day went right into the lower expected move. That's the daily expected move. Again, yesterday it had about a $24 expected move. I do believe we actually hit that spot on. I mean, the SPX was down about 19, but I saw that the S&Ps were down 24, 25 handles. Today, let's cut to the chase over here. Today, what are we looking at? I'll tell you exactly what we're looking at. Okay. First of all, to reiterate what the week looks like. So the week has a $64 expected move. So you're looking for plus or minus $64 on the week. Obviously, that's higher or lower. The daily expected move is obviously just today is plus or minus 22. Let's just call it $22. We'll round it. So it's plus or minus $22. So what can you expect today? About $22. Are we going to get it? Yeah, sure. Okay. The only question over here, and the big question is, if Nvidia starts to get a little bit wild, I think that would be the driver to move outside of this. Okay. So with that being said, look, we also are going to have to deal with in the next day or two. Okay. There's a lot of economic data that's going to start coming out today. Just so we're all clear, in about 25 minutes, you have a apologize, I'm on the wrong day. Okay, click on there, you monkey. Right here, consumer confidence, Richmond Fed. This is not the kind of consumer confidence that you really have to worry about. Everything you have to worry about right now. I would literally say 9 times out of 10, I wouldn't give a crap about the consumer confidence or Richmond Fed. Okay, but how's today any different? Oh, this marketplace is hunting, okay, for anything to latch onto. I mean, there's just not a lot to latch onto right now. And what's insane about the marketplace, and it really is insane, okay, you recognize now that Nvidia is moving markets more than economic news. And I'm really actually, again, very comfortable saying this. If you ever had a sign of a bubble, okay, there's things that go on. People, mention the term bubble, okay, but there's things that go on in a bubble that all of a sudden become from the discussion of a bubble to sheer stupidity. Okay, we passed sheer stupidity and went right to this is yeah. I'm going to leave out the terminology over there, but the reason that you have to have some well-deserved fear of this product right now. And here we go inside of Nvidia. The reason you have to have some well-deserved fear is the market right now cares about it more than economic data. Okay, how so? I'll make my point very clear with this. This morning, durable goods came out. Okay, durable goods came out this morning. Can you even tell in this tape where durable goods actually came out? And I'm not trying to be facetious in any way, shape, or form. Can you tell in this tape, okay, where durable goods came out? What time did durable goods come out? Anyone? Okay. I just want to make something very, very clear of where I at least stand with this, and want you guys to understand the implications over here. Okay. Anybody? Anybody? What at what time did durable goods come out? Now I think most people probably know that. Hmm? Sorry, awkward pause over there for more coffee. That was at 9:30 my time. By the way, to clarify, I am on Atlantic time right now. I'm actually on the island for the week. So he's on. I was actually just looking at my text message to you because power is out in portions of the island. I don't have my generator turned on right now either. Okay. Anyway, I want to show you that's where durable goods came out. Durable goods was minus 6.1%, but that's month over month. But here's the crazy part. Okay. That's actually the worst durable goods since April of 2020, which is actually the COVID lockdown. Okay. Just wait a second, but there's more. Yes, the year over year durable goods is now okay, negative 0.8%, which also absolutely sucks and is the worst since August of 2020 into the lockdowns. So you got that going for you. It didn't even show up in the damn tape. Okay. But for argument's sake, just take a look. Nvidia, I told you, is going to get smoked at some point this week. Now, this is not smoked, in my opinion. Okay. Till it hits the expected move, I'm not even interested in it. And I'm dead serious about that. Right. I'm not even interested in watching it until it hits like lower edge of the expected move. What I would construe as getting smoked, because let's actually put numbers to my ridiculous terminology. Been in this business like too long, right? Getting smoked is when you start to really cross outside the expected move, right? You get down to like 740. That looks like a long way away. It's not. You get down to 740. Okay, let's put numbers to it. That, people, that's serious at that point, because that would inflict some pain back to the S&Ps. But when I, say something has just become sheer stupidity, okay, in a marketplace, that's not out of like, oh, I'm disgusted that it can move the market. Okay, look, we've all seen crap like this happen before. If you haven't, you just haven't been in the business for a while. I've seen stuff like this to the upside, and I've seen stuff like this to the downside. Okay, and there's obviously other stocks that you can point out that have gone to like, ludicrous speed, but this one is actually moving the entire market. And that's why you just simply have to pay attention. You don't have to like it. Okay. And that's okay. You have to remove like, whatever your feelings are. I still think that there's upside. This is not about AI. Nobody gives a damn about AI, right? If they did, they would have really crushed Google. They only beat Google up mildly. But if you guys missed the Google news yesterday, took Google down 4%. I rather appreciated this news that they took it down 4%. Their AI has image generators. Okay. And people were basically making the images of some really screwed up stuff. It was like, what do the founding fathers look like? And it was it was absolutely comical, of what the AI images of what the founding fathers would look like. First of all, father would probably imply male, which they probably weren't. Okay, I'm just saying it's worth actually going to Google that crap. Google probably took it down because it's Google. Anyway, okay, David, every reference is a Spaceball reference. Look, okay. It was absolutely like hysterical though what the founding fathers looked like when somebody asked it to generate an AI image of it. it was okay, multicultural. Let's just say the people that are training that AI, okay, have confused it, deeply, deeply confused it. Anyway, NASDAQ out of the gate this morning, getting whacked back a little bit. So Nvidia, here we go. Now we're talking. Now it's on right now. Look at this. Okay. Now you would think that is algorithms running amok. You would think this would actually cause maybe a short-term bottom, a little bit of a bounce. Okay, that's a serious number right there. You realize you just traded 500,000 shares, okay, in 1 minute of an almost $800 stock. You do some math, think about the notional value that just traded through that marketplace. Okay. You're going to realize, though, this is how dynamics of hedging work. They sell, things get extreme. Okay. We actually bounce, moderate, and then we actually take another leg lower. We'll see if that leg lower comes in the next few minutes. All right. It's worth going into Nvidia right now and exploring this. So look at that. Continue to see some really wild trade, though, in Nvidia. Okay, it's on in Nvidia right now. What is? Look at this. We're actually buying puts. This is the first time that we have seen this, okay, in recent trade. There are absolutely unequivocally, okay, put buyers. I mean, it's amazing because this is it's almost like a coordinated effort. So I say that because right out of the gate this morning, look at this. You're 13 minutes into a trading day. There's a huge number of put buyers in here. That is actually going to force pressure, okay, into here. Does it mean we have to continue to go down? No. If you continue to buy puts, then we continue to go down. But the number of puts traded at the ask or above is rather extraordinary versus the number of calls. Okay, just to make a quick point with this, yes, the number of calls way outstrips the number of puts. There's just no question. It's 2 times. It's been 2 times. Okay. But what you have to understand is that right now there are traders now buying puts, specifically buying puts, okay, at the ask. They're just basically taking them at whatever the marketplace is going to offer them at. Okay. Let's see if this actually continues. Moreover, you can watch this put sizzle. The put sizzle is only 2.5 versus call sizzle at basically 3. That put sizzle starts to pick up and you're in big trouble, big trouble. But that one is a really interesting trade in here today because it is in a recent trade, the first time we've actually seen huge put buyers coming out of the woodwork right now, and they are. So keep your eyes on that one. Again, I would anticipate a little bit more of a bounce, but if we're going to have another round to the downside, okay, you basically, mark your time over here. You have about 3 more minutes, okay, before this thing would try to attempt another sell. Right. So when I say 3 more minutes, you're like, well, how do you justify that? Right down here in terms of volume. Okay. So we peaked out and we literally just called like that should probably be the bottom because that's, 500,000 shares just traded hands. You're on the clock right now, though, for another move to the downside. It's just how the dynamics of hedging work. So you'll know if the next move down, I mean, this thing will obviously crack through the lows and keep right on going, but there's no telling that, there's no way to decipher between a short-term bounce and moderation and then more selling. But in the next 2 to 3 minutes, you'll find out. Moreover, let's go look around a little at the sectors. Okay, the S&Ps are not really impacted at this point. I'll come back to sectors in a second. You're just not seeing the broader S&Ps hugely impacted. Remember, the sell side activity in here, okay, in Nvidia is, I would say, mellow at this point. All right, it got crazy in there for all of 5 minutes, and ironically, you can see all of that 5 minutes show up in the S&P tape. Okay, the S&Ps are now just moderating, waiting for more movement out of that. Okay, interestingly enough, I do want to bring this up for a second. Costco, if you're not looking at retail, and personally haven't talked a lot about retail lately, but if you're not looking at it, okay, you're missing a bigger picture of what I would term it's almost like forcing capital, okay, into markets. And again, with all due respect, there's just not a lot of places to put money right now. I mean, if you're a money manager, it's not easy. People think it's whatever, man. The money managers, you just go out here and they just go to cash. You can't go to cash. You're a money manager. You have a few 100 million or a few billion. A few 100 million is nothing these days, right? You have a few billion under management. Where are you going to go? Okay. And I'm not being, again, facetious and asking that question. Where are you going to go? Okay. You can't put billions of dollars in cash. Most banks will actually charge you money for that. Okay. For the most part, you got to go somewhere. So we're seeing a rotation right now, and it's a heavy rotation into retail. And I have to just, I got to question this one. So consumer has been incredibly resilient. I would have to agree with that. But when you start looking at stuff like Walmart, it's parabolic, right? I don't use that term lightly. Walmart up 12% in any given year is a big move. That's for the year. Okay. You're not even finished with 2 months. Okay. You're not even finished with 2 months, and this thing is up what it should be for, this kind of price action. You see what's freaking Walmart. Okay. Let me just bring up, it only has 18% implied volatility. Okay. With all, again, due respect, even look out a little further, about 17 vol. For those of you that do not know, okay, what does implied volatility, okay, really do? So you look at something like, okay, implied, okay, vol. What is implied vol? So if implied vol is roughly, let's say, 17%, what the implied volatility is actually showing you at a 17%, okay, it means it's supposed to move up about 17% or down about 17% within what? 1 year. Like what implied volatility is. Implied volatility is an expected move. So most people don't think of that because you look actually, and literally at an expected move. But when you're looking at an implied volatility, you're looking at a standard deviation for a year. So let's not even put this in terms of like, point movement, whatever, who cares, right? Oh, it's supposed to move up this or down this. It's almost moved. It's an entire year's worth inside of less than 2 months. Okay. And that's unusual to say the least. Okay. Now, when you look at an expected move, you're looking at, now because they have weeklies, you're looking at the implied volatility this week. And what you basically do is you say, all right, there's only 3 days left. Okay. Square root of 3 divided by, the square root of 365. Okay. Multiplied by obviously like, stock price. Okay. Multiplied by implied volatility, which is 0.17 in here. Anyway, you can actually solve for expected move, but forget all that crap. Who cares about what the math is? The math revolves around that number right there. All of it is really, okay, how you solve for implied volatility is how you actually derive expected move. Okay. And a lot of people don't recognize when what I would term when chaos starts to hit a marketplace, okay, you have to kind of rationalize that, this stock, which is, let's say it's moved up $10 in the last 3 months. That's accurate too, right? So Walmart was at 50, then Walmart was at 60. So the stock has moved up $10 in 3 months. Okay. And you look over here at the trade tab, and you realize, well, I mean, hell, that's a full year worth of movement that has occurred in 3 months. Okay. Some context, it's probably over a year's worth of movement. So you definitely should be concerned, okay, about some of these rotations. And again, most portfolio managers, though, they don't look at it from that perspective. And that's okay because, I mean, basically they have to take money and find a home for it. And it ain't easy. Okay. It ain't easy being green. You're seeing these kind of moves though through and through. Like everybody forgot about the whole Target scandal. Okay. There was a scandal in Target. Yes, there was. I mean, this was a stock that it was down and out. Nobody was ever going to shop there again. Okay. You know, here's another one. I got to tell you, the Target scandal, that's even better than talking about the Google AI images. All right. And it's also an area I am not going to touch that one. Nevertheless, okay, it is equally okay as comical, but everybody forgot about it right now. Again, everything goes by the wayside when you see a stock just like literally, okay, in that same. Now this is about 4 months, but then gapped up on earnings, but it was 105, okay, to 150. It's a 45-point move. It's a 45-point move. That kind of price action, right, is 479 days of movement has occurred in what, 4 months. Okay. That's the kind of chaos that we're in right now. By the way, back over to Nvidia. All right. Ooh, it's getting, this thing got up a little bit more than I would have anticipated. Things are getting sketchy. Back to Nvidia for just a moment for my own curiosity. Well, look at this. There's still a lot of put buyers, but the number of puts being sold is starting to catch up a little bit, right? We'll see if you're moments away from seeing another round of sell side activity, or it just completely mellowing out. I don't think it's going to mellow out at this point. Again, the number of puts being bought, look, starting to catch up over here. There's a lot of activity right now on the put side of Nvidia. And in my opinion, and this is just my opinion, I don't think that's going to go away. I think they have chummed the water of Nvidia for the day. It may take a while though for it to develop a really weird like price action in here. Really weird price action. Anyway, seriously, we've already gone to Bud Light now. Okay, we're not pulling up Anheuser-Busch today, but anyway, with that retail, okay, let's also pull up like the XRT retail. This is one of the more phenomenal moves. XRT is obviously, for those of you who don't know this, it's S&P Retail ETF. I'm only bringing it up simply because, in my opinion, though, the XRT is not a great representation, okay, of some of the retailers out there. It's just not. It doesn't have a lot of the stuff. Costco, okay, amazing. It's up almost 15%. Walmart, as I said, up 12%. Okay. Target's to a lesser degree, but Target's huge gap up, okay, came before, obviously the year. But you want to see some really crazy stuff. Start looking at some of the discount stores. Just make a quick point. The moves in here are phenomenal. Again, you're seeing stocks that are making, as I said, year moves inside of less than 2 months. And to me, and again, I'm going down the beaten path over here because stuff like Macy's earnings today, all right, stock is actually has not gapped up, but has definitely exploded a little higher. Speaking of which, in the pre-market, thing actually traded lower, then it actually exploded higher. Okay, have concern at this point on the front of retail, right? The only, I think, takeaway over here is, again, Macy's just moved from a $11 stock to a $21 stock, effectively doubling in a few months. Granted, Macy's does have some implied volatility, but nothing to warrant the kind of movement that we're actually seeing in there. So again, I think we're going to have some very interesting times ahead of us when, again, shares of what are thought of like, and again, I have to go back to like Walmart on this. One of the most mundane stocks in the entire street is exploding to the upside over here. Okay. It looks like to me, and I think the summation of this is money doesn't really know where to go right now. And it's just chasing itself. So money gets thrown into Walmart. Let's throw more money into Walmart. It's up. They're pressing, okay, bets on loaded hands. Okay. And that works. I mean, in all seriousness, it does work until it doesn't. Okay. And when it doesn't, it's everybody actually moving for the door at the exact same time. So I think we're going to see some bigger issues coming into play here. Speaking of bigger issues, and again, for those of you that are not aware, we're talking about Walmart being a $50, $60 stock. Everybody is aware that we're now officially split adjusted. Okay, it freaks everybody out because these funky strikes. This is funky strike, right? There's funky strikes in here, but we're now officially split adjusted inside of none other than Walmart. It's weird talking about Walmart being a $50 or $60 stock. All right, onward from there. A few other stocks that are in the news. Okay, speaking of news, you do have news coming out in just about 3.5 minutes. Okay, as I was saying earlier, like most of the time I would pay zero attention to the consumer confidence. Okay, I just wouldn't pay attention to this. And you're like, well, why? Right? It's basically these ridiculous surveys, right? And this is not like the Michigan, University of Michigan like survey. This is one of surveys conducted by Toluna, okay, an online community platform, okay, Toluna, Cortuna. Anyway, it is about as reliable as well, absolutely nothing. I think it's purely worthless, but the markets can react to it. Richmond Fed is also coming out. This is more economic data. Nevertheless, okay, no one typically pays attention to this either, right? What's different today is, yeah, we're hunting right now for anything to kind of latch onto. Speaking of latch onto, the monsters that be, okay, are largely mixed in today's trade. Nvidia is still trying to kind of recoup, right? I told you, like, it's, you had, like, you were on the clock, and right here you needed to see this thing back off a little bit. This is some fast, very sketchy trade. It's got a bid back under it. Okay, all it will take though to push this thing a little lower, and here you go, be some put buyers to come in. The put buying has largely diminished at this point. Okay, that doesn't mean it's not going to come back though. You know, this could actually result in another push. Let's see what this consumer confidence. I would actually suggest the consumer confidence number could actually spark another round inside of Nvidia. But Nvidia, things got crazy, but only for like a moment, and then it was all over. Speaking of which, not a lot of action out of Apple. Okay, I also want to quickly point out uh, Apple lately, the volume in the options, even here, is starting to dry up a little bit. Very, very strange to say that. Microsoft, look at this. Nothing going on. Here's the alarm for the consumer confidence in Richmond Fed. There's nothing going on this morning at all. 33,000 contracts inside of Microsoft is crazy light. Just to give you a comparison, you're almost 300,000 contracts right now inside of Nvidia. Tesla is always complete and total insanity, right? 500,000 contracts have already traded in there. Let's cruise over just for a minute or two. Then we're going to look at some positions. Let's cruise over for a minute or two and just look at S&Ps and see if this marketplace actually moves on these numbers. Okay. I'm always surprised what can move a market. And I would be surprised to see consumer confidence, like a survey, and a Richmond Fed move of the market. But as I said to you, look, like the volume has completely gone, right? That's almost a warning shot into itself. There's just no volume right now. So everybody's pulling back for this. You know, we're not even like, but substantiating maybe 1,000 contracts in this minute. It's crazy. Okay. And here you go. Numbers out, and we are already moving on it. Okay. And that's kind of the marketplace that you're living in right now. Okay. You don't have to like it, but you better understand. There we go. It's the biggest candle we've seen all morning. So a ridiculous consumer confidence has now moved us more than durable goods. All right. And it's and the first move in here may not exactly be the final move. Okay. Consumer confidence ironically has fallen considerably. So it's 106 versus 115 expected. So apparently, when you're no longer confident, we can definitely rally there. Got to remember that one. All right. You also have the energy sector backing off a little bit. Caterpillar still holding its own. By the way, I'm watching the Caterpillar in-out spread. Nothing really going on. Okay, we've laughed, we've cried, we haven't done anything. We're basically sitting right where we needed to be. Like I can't say anything positive and or negative. By the way, if you're not in this position, okay, it's a $5 wide spread. But if you're not in this position's still absolutely available. Okay, it's the 325, 320 put spread, 325, 320 put spread. You can grab that now for about $1.80. So grab them if you got them. Anyway, that's it's still definitely open for those of you looking for an in-out spread. It's a bearish one, largely predicated on skew. We don't need exactly a big move over here. We just need, like, give you a quick example. Even this week, a move, even to the lower edge of expected move, okay, would probably get us out profitable this week. That's the thing that we're looking for over here is we don't need like an incredible move. We just need, and we were almost out right here, but now that we've matured a little bit in terms of the spread, a move just to the lower edge of the expected move at any point this week would actually see, as I said, degrees of profitability. And a trade like that, okay, I'm always working a closing order. I'm working a closing order because we were within 20 cents last week. We were within 20 cents of actually closing that trade profitably. All right. Did we close it profitably? No. Because again, I've actually been working this one for well, here you go. I started working that one on the 21st. Where was the 21st? There you go. Right there. Right. So we were within just a few pennies of closing that one profitably. We took back off to the upside. It's okay. We just need a return to the lower edge of the expected move in that trade. All right. So Steve P said, how about a long-term 80 delta put on cap? Yeah, Steve P, man, I mean, completely viable. So if you look at a year-to-date percentage basis, it's up about the same as like Walmart. This thing has also had phenomenal run. Let's call it 220, okay, to 320. Let's think about that. It's $100 move. Caterpillar. Okay. Are they reinventing things? Absolutely not. It's Caterpillar. And $100 move, okay, is the kind of move that you would see in like almost 2 years of time. 2 years of time. And that move has actually played out since what? November, December, January, February. Okay. Again, I actually, Steve, the more, you look at this, the more I like the position. I am, in fact, already short in some cat. Okay, I got me some short cat in here. I'm not making or losing anything today. What a slop fest this thing is. Slop fest. Okay, it is a slop fest of a marketplace this morning with Nvidia. Okay, just kind of dragging us around a little bit. This thing, again, I argue, it's not over yet. It's far from over. There's a lot of activity here. Really sketchy volume kind of showing up inside of Nvidia. But prepare for impact in here. Prepare for expected move at some point being hit throughout the course of this week. Meanwhile, as the S&P started the day up 5, they slipped a little bit. We just rallied back on that consumer confidence number. There might be another round of selling coming in. Volume once again has actually picked up just a bit, but people, there's just not that much to read into here. Now, this is where you look and you're like, oh man, volatility is dead. Yeah, unfortunately, it is until it isn't. Okay. The VIX, I was talking about this yesterday, but I have to reiterate it a little bit. The VIX yesterday ended the day down, which I find a little bit surprising. Why? Because the marketplace sold off, in the latter portion of the day. Look at the intraday chart of VIX. Okay. And again, you should find this interesting to say the least. There is a rather steep decline of implied volatility, okay, in the last 2 hours of trade yesterday. But at the exact same time, and again, I like to display things that, make you shake your head and go, what the, this is definitely a what the same time that the marketplace that was from 14 to 16 over here, okay, there's actually a pretty steep decline over here. Rallied back a little bit and faded into the close. Okay, you had volatility down with the marketplace down. So the one thing I want you to be mindful of first, okay, the VIX at this point. So markets are basically running up to all-time highs. The VIX at this point, you would think would be a lot lower than it presently is. Okay, maybe it's actually due to come a little bit lower, but if the market's at an all-time high, you would actually think, it should be all the way down here at 12. It's much more elevated than that. I think it has to do with the single stock risk of something like Nvidia. Okay. The other really strange thing is you just saw a bit of a sell-off yesterday. Nothing crazy late in the day, some sell side activity with the volatility actually collapsing, not just coming off, collapsing. Here's another situation where in the last 3 to 4 minutes, what do you see? You see the S&P is going down. Is volatility reacting? And the answer is unequivocally, nope. Now, this is the volatility futures, okay? The markets right now almost, if you will, asleep at the wheel. So again, this is where I tell people you got to kind of pay attention to factors like this, because you know it's when things you start looking at the tape and things look incredibly odd on the tape that you have to start to worry. And moreover, like a lot of people probably think the exact opposite. Volatility is dead. Everything's locked up over here. Nothing's going to move. This is the time where you actually have to have a little bit of concern. All right, here's the situation. Dow's backing off a little bit. Okay, the S&Ps, whatever. There's no big sell side activity, but there's absolutely, unequivocally, there's just no movement in vol. Okay, there's no real movement even going on in the bond product right now. Nothing is reacting to the S&Ps, okay, and their movement. And again, that's where you have to pay attention to. Okay, and why you should pay attention to it. The other thing I brought your attention to is some of the retail stocks. Now, if retail starts to come off, where's money going to go next? Okay, and I want you to start thinking about that. Where do you think money's going next? You guys tell me. Okay, we're going to financials. Look at financials. Okay, money's already been there, done that. Right, it's already run up substantially. Okay, what else you got? You got energy. Okay, energy is a geopolitical crap fest right now. So this one hasn't exactly been hot, but blame it on geopolitics. I'm fine with that. Other sector you're going to go to, cruise over to like, XLV. Okay. And they've already been there, done that. All right. This is really, really difficult when you start looking at it, and try to be constructive about it. You're going to do flush into Apple. Okay. Possibly. Apple now, though, down 2% on the year. Okay. Something spectacular. Apple even said the key word AI. Right? It said AI, and it didn't really go up. Actually, it did, and then now has faded a little bit. But they said the word AI. With that being said, okay, I like it. Somebody said XLU. Okay, XLU, no love in here. Interest rates, though, largely undetermined. Okay. The other problem you have in XLU is this one actually can't take that much money. It's this is a hotbed of crap in here, right? Where this is a marketplace where, again, I constantly say, like, I'm not trying to be facetious. There's not a lot of places to be able to put money right now. You look at some of the commodity products. Okay, look, when they're buying Bitcoin like this, back up to 57,000. Again, you have to have a little bit of concern out there. As I said, they're traded right now is they'll put capital anywhere. Okay, this is exactly what like bubbles look like. And what's happening is you're actually seeing little deflations and popping in other places. Okay, can you give me an argument of why the financials have moved from 32 okay, to 40? You can give me a technical argument. You can give me a fundamental argument. I'd love to hear it. Because again, the price action in here, all right, with all due respect, the price action in here, just on a year-to-date basis, whatever, it's up like 6%. 6%, but it only has, okay, about 15 vol. So you're seeing a pretty substantiated move. Okay. Moreover, the full move from 31, okay, to basically 40, it's about a $9 move. That kind of price action, $9 move. Here you go. There's the first time you see a $9 move. It's almost 2 years of price action has occurred since basically the beginning of November. It's 2 years of price action inside of 4 months, right? Have concern, big price action, volatility, crushed, not paying attention. Okay. One stock that's basically kind of running the roost out there. Not saying it's over. Okay. But I am saying these capital rotations are going to come fast. They're going to come furious because the problem you've got right now is a lot of these products, they're really, really full. And a lot of returns have been chased in here. And if we start to move for the door, it's going to happen very, very rapidly. And I think at this point, look, if you're long markets, hedge in some way, shape, or form. You could use things like atomic hedge. For those of you that have no idea what an atomic hedge happens to be, okay? There's a couple of different, you can use an atomic hedge, but I much prefer the income accelerator along with like buying a put. So you could go into a product, like if you had a portfolio right now and you need to hedge that portfolio. Like if you actually say to me, hey, no, Don, I kind of agree with you. Things look a little crazy. Okay. You could go out and you could sell out of the money calls, right? You can even go like 115 days out and sell, okay, way out of the money calls, and following some of the criteria of the income accelerator course, right? So everybody that's tuned in, and if you're listening to this right now, you have access to the income accelerator course. So you come in here and you actually sell, let's call it a 9 delta, right? You come in here and sell these for, let's say we sold like 3 contracts, okay, for 13 bucks. You're actually collecting at that point, what, 2 grand. Okay, so you're collecting like 2 grand. You probably collect about half of that. You could actually turn around and buy a shorter term, like out of the money put or put spread, right? You're basically you're financing, your trade in here. Let's just come in here. All right. Maybe just buy a put spread. Okay. If that the skew is actually, suffice to say, a little better for the put spread, similar to what we would do with a look at this $16 debit. $16 debit only cost you 800 bucks. Okay. That's viable. This gives you a nice $100 wide hedge. All right. Yeah, I think it's time to again kind of rekindle the idea of a hedge. Because people get very, very fast and loose when markets start to rally back up, especially like right now. They get very fast and loose, but I'm telling you, there's a lot of things in this screen that are, just not looking right. Okay. It's one thing when you have like one stock that's rallying in the marketplace. It's completely another when markets are making moves and volatility isn't reacting. Bonds are not reacting. Okay. The dollar, meanwhile, it still looks like traders are buying up dollar and hedging. I mean, again, you can argue, well, no, this is a little bit of a downtrend. It's still in a wild uptrend this year. Okay. This actually looks though like people are still buying dollar, still hedging in some way, shape, or form. But it's going to get dicey in this marketplace very, very quickly for a lot of these sectors. I can't tell you if that's going to implode the S&Ps, but I can tell you it's going to get really dicey in these sectors. Like right now, I just don't think you can make an argument for wanting to buy some of the financials. Interest rate policy, completely uncertain. Economic, completely uncertain. The longer they keep the interest rates higher, the harder we're actually going to hit economically. So it's a delicate dance. I'm not sure I'd want to be in the financials during that dance. Okay. The only thing you're going to look at over here is be like, wow, we could definitely buy some tech. Okay. That's a hard fought battle to want to buy tech, especially when you look at stuff like Meta. It's already up 40% a year-to-date basis. Like what tech are you going to buy? You ain't going to Apple. It's down though 2%. Again, some really tough arguments right now, right? Really tough arguments. All right, let's actually break down a couple more positions. I've got about 15 minutes left over here, and there is just a complete and utter slop fest. And I hate days that we come in here and it slops around like this. But let's go to some individual stocks. So a few other things that are in the news today. Zoom is one of them. So Zoom earnings. Okay, what does the price action look like? Well, that's a complete crap fest. This thing was up big time. It's up 13% pre-market. Has actually slipped quite considerably. Right now, up 4%, which is almost unchanged. So take a quick glance at this one though, because I looked at it in pre-market for this exact reason. Is it had a $7 expected move? Just bear with me for a second. A $7 expected move, and closed yesterday at 63. So it was priced, okay, with a $7 expected move. It was literally priced to move to 70 bucks. And it did exactly that. Now it's actually completely slipping. So Zoom well within side of its expected move. And this does not look good. Does not look good at all. This thing just cannot really get off the mat lately. Just bear with me here as I open up. For those of you that don't recall, you have to open up the 5-year chart. That's COVID. That's now. So the world is going to Zoom. The world reopened, and we're still on Zoom right now. It's good. It's good stuff. All right, onward and upward from Zoom. The next one that I actually liked to point this one out. You know what? Let's go back to that 5-year chart because you'll appreciate this one. Okay, the next one bringing up ARM. Okay, so the reason I'm actually bringing ARM to your attention, it's obviously something that hasn't been public for a tremendous amount of time. Stock goes absolutely parabolic. The interesting thing today, ARM, which is down 2%, it received a downgrade, and it was New Street that downgraded it, and the stock actually rallied in pre-market on the downgrade. Okay, obviously it's now backed off a little bit, but this is stuff, again, it's all painting the exact same picture. No one really is paying attention, right? Again, if you're a money manager and something that gets downgraded, and generally speaking, you have to have a little bit of concern for that. Okay, the concern in here kind of fell by the wayside a little bit. It's only a $3 move, which is well within limitations. I think it's a $12 expected move to the end of the week, well within limitations of where it should be. So again, here's one that is possibly an overcooked turkey, but the stock only moved from 74 to 140, which brings up a super microcomputer as well. Okay, this thing is still holding it together. We talked extensively like 2 weeks ago about supermicrocomputer, the move from roughly 300, cracked over 1,000, backed off right now. Okay, moreover, still seeing some wild volatility on an intraday basis. You're over 100% implied volatility, okay, which has subsided. I'll reiterate, has subsided substantially in terms of implied volatility. Okay, this one though, I mean, just between now and the end of the week, right, which is what, today and 3 days, still has about an $82 expected move. I love to look at stuff like that. Okay, and everybody likes to ask me though, I get tons of emails about this, why I bring it up. Like, what would you do in this marketplace? Okay, the first thing I look at in here, the bid offer spreads, okay, they're wide. Now, granted, they need to be wide. It's 127% implied volatility. So like, that's not a bad market for 127% implied volatility on what is an $850 stock. Like, you can rip apart these markets all you want, but they're actually not that bad for that kind of implied volatility. But the problem that you run into in stocks like this is the skew is just, it's not just formidable, it's like almost untradeable. Okay, the skew is wildly inverted. When you're trading an at the money option and it's 120% implied volatility, you buy a call and the freaking call is $39, okay, for the next 3 days. But can the stock move it? Well, hell yeah, there's an $82 expected move, but you're paying, 41 for a stock that can only move 83. Something ain't right there. It's just crazy. Anyway, the skew really picks up. And what people don't understand, okay? So how come I don't, really like trading stuff? Look, here's one of the problems that people just, again, when I say they don't understand, it is really defeating to explain this to people. But if you buy this, let's say you buy this option, you're buying 130% implied volatility. That isn't the problem. The problem is if the stock does rally, you're going to slip down the implied volatility ladder, meaning that your 130% volatility is actually going to diminish. All the market making firms realize this crap. So you're actually thinking I'm going to make a ton of money, but your $13 option, okay, it moves, but the amount of decay coming out of here with that kind of high implied volatility and the skew is against you. Holy crap, is this ugly? I mean, it's ugly. You can look at what's called Vega in here. Vega doesn't look like much, but Vega is like 24 cents. Okay, but that's for every point change in here. I mean, you get annihilated on volatility. The vol drops, even if you're an at the money option, the vol drops, okay, by what, 8 to 10 points? Let's call it 10 points. Of this $13 option, you're going to lose almost $3 of your $13 option, okay, just for implied volatility slippage. Like, that's where you get ripped apart in a product like that. I hope that makes sense. It's not exactly the easiest thing to explain, but okay, you got to use, if you're going to trade something like super micro, You got to use spreads. So spread, don't just, even if it's an intraday trade, you have got to spread your risk or you're going to get completely ripped apart by by that implied volatility. Like there's just no if, and, or but about it. Okay. Um, anyway, with that, just looking at this real briefly here. So super micro now down 18 bucks. Things are getting a little bit more interesting in here. Okay. It's even rallied back a little bit back to Nvidia, which is well, one ironic thing we had called what the absolute low was with the spike in volume. Let's go look down below again. There's still a lot of a lot of put buying going on. Okay, abnormal amount of put buying going on right now. So you still got to keep kind of your head in the game for for the foreseeable, trading session over here. I suggest to you, okay, at the very least, Nvidia is going to have another round of sell side activity. They're going to come for this thing again and try to buy puts at some portion of the day, and it could be sooner rather than later. Very difficult to discern when that trade is going to be, like turned right back on. But if you're trading NASDAQ, you just got to be well aware, right? You're going to get some drawdowns inside of the NASDAQ today. They're going to be fast and furious. Okay. They're going to take another round, another shot at Nvidia throughout the course of the day. Nothing else that's really a standout. Yeah, I'm watching Meta a little bit, but the price action here is just sloptastic. Okay. If you do take a quick glance, by the way, at auto expected moves. So I love to look at this because when you start to substantiate, Meta hasn't done anything in the week. Microsoft, okay, halfway home to the lower edge. Okay, Apple, halfway home to the lower edge of expected move. Amazon, okay, basically unchanged in the week. Google got absolutely smoked yesterday. It's 2 deviations out. Meta, as we were saying a moment ago, unchanged. Okay, Tesla has a big bid. Tesla's outside the expected move, and of course, Nvidia. And Nvidia is literally at this second completely unchanged from the week. And that's why I said you have to anticipate these markets. Okay, you might look at them right now and think they're not going to do anything. They're going to do something, right? And I don't think they're going to wait for some of the economic data that's going to come out. Okay, Netflix. I know somebody was mentioning Netflix. Look, Netflix can be interesting and you can definitely trade it, right? But it is absolutely not a market mover. It's kind of its own little animal these days. When I say it's not a market mover, no one gives a damn. It's a $259 billion company. And I'm trying to say that nicely, but no one gives a damn because you have products, okay, that I have listed it next to, but you got products in here that are literally $2 trillion. Nvidia has a bad day and it loses in Netflix. What I mean by that is like the market cap of Nvidia can move more than what Netflix is worth in a day, right? And that's just to put it into context. You get things like Walmart, approaching a $500 billion company in Walmart. It's it's crazy. No one really cares though because it doesn't have the implied volatility to move things, right? So all right, looks like well, the first hour is pretty much up over here, and the S&P's opened up 5. They are now massively unchanged. I mean, literally, we're unchanged. Nasdaq is right where it was, literally when the bell went off. Bell went off is right here, and we're basically trading the exact same level. Nvidia coming for another round, maybe some sell side activity coming to a theater near you. No real change though of any of the implied vols. The biggest mover on the screen today is probably in terms of a product that even matters. It's probably something like Bitcoin. Okay. I'll make the argument over here. The ETFs don't have a lot to do with this. Okay. This is just simply put some capital rotations that are playing out. Okay. Possibly defensive capital rotations that are playing out. Some money maybe moving from Nvidia into products like crypto. Okay, you could be seeing that a considerable amount more. So in a few minutes, we're going to be bringing on the professor. Jeff Bierman is going to be on here. Oh, almost momentarily. And Jeff has actually got a completely new, and I think this one is actually interesting. Correlation or coincidence. Okay, so this is the title. Okay, correlation or a coincidence. I got to get that out. Weird, but successful stock market indicators. So Jeff, I'm gonna be very interested to see if you have like the hemline indicator in there. Okay, hemline indicator over there. That's bullish or bearish years based, okay, on the hemline of skirts. I know where Jeff's going with this one. There was actually a one for a while that was also like NFC, okay, or AFC. Whoever won the Super Bowl, it was like a bullish or bearish year, and it was actually really accurate for a period of time. For the life of me, Jeff, I can't remember which one it was. There's some wild crap out there that is either correlation or coincidence. You be the judge. Okay. Oh, Jeff actually does have the hemline indicator in there. I love that one. I love that one. The shorter the skirt, the more bullish the marketplace. I'm gonna leave that one the hell alone. That's I guess they sell those skirts at Target. Sorry, cracking myself up over here. Okay, that was the most messed up thing all week. Anyway, Nvidia continues to be the stock of this first hour, as for the first time, sorry, for the first time we've actually seen real put buying in here. Okay, if this continues, you got yourself some real issues in the next couple of days, where the put buying right now is just eking out a little bit of edge over the put selling, but unusual to say the least. It's cooled off in here considerably, but again, that could return at any moment. So with that, I am going to turn it over to the professor. Jeff Bierman is coming on here in just a few seconds. Markets right now largely unchanged. As I keep reiterating, you just got to keep eyes on Nvidia. You also have to keep mindful that the market today, that is the SPX, is still slated for a $22 move and literally has moved 17 cents. With that, sorry, guys are killing me inside of the chat room. With that, Jeff Bierman's coming on right now.